Last week was volatile, but the good news is the S&P 500 ended up higher for the week. And that was largely a result of the announcement on Wednesday of the tariffs being paused for 90 days for most countries on most sectors. There were some tariffs that still remain on different countries, particularly China. And the U.S. said they're trying to single out China on the tariffs. But the market overall responded very positively. And on the weekend, this weekend that we're in right now, coming up to the April 14th week, on Friday, we did see the White House administration announce the tariff exemption for semiconductors. Everybody thought that would be positive. Then on the weekend, the Trump administration seemed to take that back. So a little bit of confusion. Let's take a look at what happened in the markets last week, because we want to focus on some of the really interesting stuff that happened last week, which hasn't happened before, or I should say at least a very long time, and take a look and see if it's going to continue this week, because it could show that there are some cracks here. First of all, here's the S&P 500 was up 5.7% last week. Technology, which has been the losing sector for a little while, was up 8.8% on the week. The defensive sectors were some of the weaker sectors of the market last week, as we saw that real risk on really flood back into the market. In a reversal of what's been taking place recently, we saw the S&P 500 actually being one of the better sectors. Here's the NASDAQ up 7.3%. TSX was barely up last week relative to the S&P 500, 1.7%. China was down 8.1%. There really is a big, huge trade battle going on. We've got the two big dogs in the world, economic world, really duking it out here. And countries have now just sort of stepped back and said, well, we're going to wait and see what happens here. Emerging markets was lower last week as well. So the big news is we saw that real shift. We saw U.S. markets doing better than U.S. Previously, but last week we saw that change. If we look at some of the sectors in the market, here's gold is up 6.6% last week. Gold miners up almost 20% on the week. Absolutely mammoth. Now, we're going to talk a little bit about gold in a second and why it's performing so well at this time. We would look across the different sectors. Semiconductors on the week were up 11.3%. This was before the announcement was made on Friday. We'll have to see how they fare. Home builders were actually negative last week. U.S. banks were negative as well. We did see the U.S. banks start to release their earnings. Now, this is the big money center banks started to release their earnings on Friday. Overall, the market wasn't that happy with them, despite JP Morgan coming out with better than expected results. We did see the financial sector on the day underperform. This is the big story of the week, or at least one of them. Here we see the yield on the U.S. Treasury note starting at 3.99%, ending up at 4.49% on the week. That's a huge rally in yields for the 10-year. And this was really what was really strange last week, because we saw this risk-off environment earlier in the week, and yields were heading higher at the time. Usually what you see is the yields head lower in a risk-off environment as investors rotate from stocks into bonds. That's not what took place. And we saw this trend actually persist throughout the week with a rising 10-year yield. Last week we saw the Canadian dollar do really well. It actually closed up above 72 cents at the end of the week. It's up 2.5% relative to the U.S. dollar. U.S. dollar was down for the week, closed around 100 for the Dixie, and it lost 2.8% relative to world currencies. Now, it's interesting because when the markets were going down, the U.S. dollar was going down, and when the markets were going up, the U.S. dollar was going down as well. So we're going to talk a little bit about that trend. This graph shows U.S. dollar relative to some of the major currencies since the beginning of the year. Here's the Dixie, which is relative to the world currencies. You can see this has been a downward trend for the year. If we take a look at the Canadian dollar relative to the U.S. dollar now, here's April 7th, the beginning of the week. We did see the Canadian dollar do really well last week. We saw the euro do really well last week. And we saw the Japanese yen do really well. So this was really a story about selling the U.S. dollar. This isn't really so much a story about the other countries with the strong currencies. It's just selling the U.S. dollar. We saw the U.S. dollar being sold at the beginning of the week when we saw the markets pulling back, and we saw the U.S. dollar being sold when the markets were rallying as well. And if we take a look here, the euro here, the euro, many of the countries are absolute basket case economically. So this isn't a testament to the strength of those particular countries or their economies. It's more of a reflection of what's happening in the United States. Here's the yield on the 10-year Treasury note in the U.S. Now, we did see this. Look at this rock and roll higher on the week. Absolutely incredible with what was taking place when we saw that risk-off environment. The U.S. dollar, the 10-year yield was heading higher. And even on the risk-on environment later on, we saw the same thing happening. If we take a look here, we're really still in this range. So from that perspective, it's not like, hey, we've broken to all sorts of new levels or anything. We're just shy of 4.5%, but we haven't broken above even the level that we were at earlier this year. What was a little bit concerning is the steepness of this curve of how fast the yield went up. That was the big concern last week. We saw this real strong movement, and you have to respect not only the direction but the magnitude and the speed of the change in the interest rate market. That can be extremely important. If we look here, this chart provided by Bianco Research. Here's the change last week for the yield on the 10-year. You have to go all the way back to 2001 to see that size of a change. In other words, what happened last week hasn't happened since 2001. So that is concerning. So why was the U.S. dollar heading lower? Why were yields rising last week in that environment, and which really forced Trump to all of a sudden back off on the trades? It was all about the yield on the 10-year Treasury note heading higher that really forced Trump to say, well, we need to put a pause here on the tariffs. But so what was taking place? Well, I'm not going to go into detail here. It's in my newsletter. You can get my April newsletter to see that. But it really was that we've seen this anti-American sentiment being around the world for investors, countries. We're seeing some selling of U.S. securities. So we're seeing some money being pulled out and put elsewhere. It could be that China is actually selling some of the securities as well that they do have. We don't see the data yet because it's just very recent. With the basis trade, which is hedge funds trade, really started to implode last week as well. We saw, which would cause yields to rise. And then we saw the Japanese, the yen carry trade start to reverse a bit too. And quite frankly as well, with the whole tariff situation, if you think about it, in the past, what the U.S. was doing was saying, well, we'll buy your stuff. And then with those U.S. dollars, you turn around, you buy our treasuries. And if you don't buy our treasuries, that means your currency will be too high. We can't buy your stuff. So buy our treasuries, which will help put up our currency. And that was sort of the agreement that the U.S. had, not written down anywhere, with China and other countries. But now with tariffs, the U.S. isn't going to buy as much stuff, let's say from China, particularly with their tariff rates, a very, very little. So they're not going to have the U.S. dollars to buy treasuries. Now, in the case of China, they really haven't been buying treasuries for quite a few years. They're not big buyers of U.S. treasuries. Japan is actually the largest holder of U.S. treasuries. I mean, China still holds a significant amount. But nevertheless, but this was reflective, and if the same thing happens in Europe as well, it now takes away the impetus. So we've seen that break a little bit. So there's been really a confluence of factors that pushed the yield on the 10-year higher, and the White House needs the yield lower to finance the government debt on a go-forward basis. So where was the money going? So yes, some of the money was going out of the country and into other markets. Perhaps over the last couple of weeks, we've seen a little bit of that. Not so much last week because we have seen those markets actually underperform. But so where's the money going? But there's one market that actually did really well last week that's quite interesting. If we take a look, this chart is for gold. And we can see gold has been on fire, outperformed the S&P 500 in 2024. Most investors don't know that. But here's gold last week. Now, don't forget, rates were rising. Yes, the U.S. dollar was falling, but rates were rising. And gold was up over 2% last week. And so a lot of investors are saying, well, okay, if I don't want treasury bonds, where am I going to go? I don't want to go into the stock market necessarily. So we're seeing institutions, investors start to move into the gold sector in a bigger way here. Now, it'll be interesting to see if this trend persists because gold has been benefiting from the uncertainty, the monetary uncertainty and the tariff uncertainty. So we'll have to see if this trend persists. Earnings season started on Friday. We saw the big money center banks start to report. JP Morgan came in with better earnings than expected. The market liked it for JPM. But if you take a look overall, here's using the XLF ETF for the financial sector, which is bigger. But yes, it was positive, but underperformed the market on the day. So not a really positive movement on the stock market, or I should say the financial sector, based upon their earnings, because we really want to see the banks actually really outperform the S&P 500 and be positive on Friday to really create that longer term positive sentiment, which can carry the market higher. So we didn't see that on Friday. We'll have to see what happens coming up, but we are starting to see a lot more earnings coming in this week. Last week, I said that it was expected that we might see a calm market if nothing big happened, and obviously something big did happen here. Here it is Sunday night. We do see futures up around 0.5% after the semiconductor tariffs were given an exemption for the sector, and then they said they were paused, and they're coming back. So slightly higher. I think we will see the market sort of settle down here a little bit over the next few days. We might see buy the dip buyers come in on the fixed income side. So on the U.S. government side, maybe it's moved too far. Investors are saying, well, you know what, this actually might be a good opportunity from here. Just like what we see with the stock market investors buying the dip with the 10% dip. So we could see that take place as well. We do have Friday, which is the options expiry day, which tends to be a very volatile day in the month. So we could see some movement in the markets there as well. But I think we're probably going to see some sort of settling down unless something big happens again. And that's totally possible. It'd be nice to see the market stabilize here. But a lot of emphasis is going to be carried over into the earnings this week. And some of the companies are going to be reporting as well. So really look towards the guidance of some of those companies and see how investors react. Thank you.